Good afternoon, everybody. It's 11:15, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating this session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Let's jump right in here. USDA released the report numbers here. Corn yield 183.1, which was higher than expected. Soybean yield 53.2 also came back higher than expected. Production on the corn side 15.147. Soybean production 4.589. And as far as acreage is concerned, corn planted acreage dropped 800,000, and bean acres were up 1 million. On the ending stock side, corn ending stocks 2.073. Soybeans came back at 560, which was sharply above the estimates there. And wheat was 828, which was actually below the estimates. So, Justin, I think a few initial comments and thoughts as we look at the report, and then we can throw it around the room here.
Yeah, still trying to digest it all, but the acreage number, corn and beans kind of comes in line with what we had thought months ago. So no surprise there to see more beans and less corn. The immediate reaction, obviously beans are down 17, corn's higher. We're using a 183 yield, a really aggressive yield number, and obviously it can hit that or higher. To kind of keep the corn carryout stable, and beans is the opposite, really. I mean, I do think it's surprising that they raised the bean yield so aggressively on today's date, but that with the combination of 1 million more acres, got a 560 carryout with a demand number that looks kind of really hard to hit. We've raised exports again. We're nowhere near that pace. So the government felt that they had to raise demand to try to find some balance with the 560 carryout. So that's going to be really hard to do at these prices. You have to find some price where China steps in aggressively. The total Chinese import number also looks suspect. Beans is a tough balance sheet right now. So the biggest thing is, can we get a 53 yield? So, it's going to have to be a yield reduction to make, in my opinion, to make beans not look just overly burdensome.
And doesn't take as much in corn, I think. Is that your point, Justin, that it felt like the market was trading kind of a 184, 185 type of number?
Yeah, I kind of thought we were trading a 184 this whole time. I'm surprised the government came out as, I guess I shouldn't be that surprised, but that they came out as aggressive. We do know more about corn production, obviously, at this date than we do beans. Beans at 53, pretty aggressive for the USDA on the August report. So, corn, we've said this for a long time. The corn is friendlier than beans. It's kind of a, which one's less bearish at this stage, but, corn, obviously a big short. We have to contend with farmer selling going into, the next few weeks going into harvest. But, pretty friendly overall compared to what we've been, I think, trading and, going into this report.
I have a question for you guys too on this. Like, you go look at the individual numbers. We're still trying to digest this, like it just came out, right? But they have Illinois at 225. The previous all-time record was 214. Right? What do you think of that number?
It's my opinion is we could hit it, but we have to finish really, really strong, right? If we keep getting moisture, we have these cool nights. Like you have to have these ideal conditions, and we have had them right now. That's my opinion. Like even just looking at like our farm or our clients, like the potential is certainly there. I think even those years that like when we got 214, we had clients in Central Illinois that just didn't finish off great. Maybe they took 20 or 30 bushels off of what it could have been. So to get those big, that kind of a number, I think we're just going to have ideal weather. I think through mid-September to get that. So right. That'd be my only comment. I think absolutely the potential's there for Illinois to have that kind of a number. Just have to see if we get it.
Right, and the same thing for Iowa. Iowa's previous all-time record was 204, and they've got us projected at 209. So kind of similar numbers, maybe a little more achievable there too.
Yeah, and there's, Iowa, like, now that's a big spread, right? We're 16 bushels over Iowa and Illinois, which I'd be curious last time that happened, if ever. But we know northern Iowa's got issues for sure. So Iowa's one of those ones that's really tough to hurt as bad as like previous years. You thought Iowa was a disaster, but I think we've proven the water holding capacity, and Iowa's just tough to really hurt. So is there enough good ground in Iowa to get a 209? Probably. Same thing though. I think you have to finish off really strong.
You're right. There's not the only year that would have been the case. We were 200. Iowa's 178, and that was 10 years ago. So
yeah,
right. Well, in this report too, right? It's farmer survey and satellite data, right? So talking to obviously a lot of customers and looking at our own fields, and you survey a farmer right now is pulling ears or looking at their fields, and this could be a high mark. To your point, Justin, I mean, we could go backwards. The USDA has done it before historically, where they've way overshot yield in the first couple of reports until they actually got ear counts and weights and all that kind of stuff, and had to revise later in the year. In some of those bearish years, you see a nice rally going in the end of the season for that fact. I think that we overdo it early and then bounce back. So I'm not saying anything on this report necessarily, but
well, and if it is a big year like 2014, like the yield should go up every report, right? As we get more evidence, so we'll see. You look at 14, those big years, right? They go up another couple bushels and another couple bushels. So we're up today. Not surprising because you kind of look at it like, okay, you need a 183 yield to make carry out not go up much. So. Where beans is like, wow, how do you fix this balance sheet? I kind of look at it like, okay, you need to lose bean acres, and you got Brazil at another giant record. So beans just has a problem, unless we're past those years where you can just write China down for another 10 million tons to fix the problem. Like they've got their own problems over there, and it looks like their demand's kind of stagnant. Like they have a mature soybean meal usage. They've got demographic decline looking like that's happening. So they've always bailed us out in these previous years. And now you've got Brazil that's just, keeps producing. So it's an interesting one.
So you got the corn bean ratio right now at 2.46. I mean, wouldn't you think that goes back to a more normal, if not even a low ratio number?
Yeah. So you've got new crop, going into this report, it was a 2.34, which is, I think that's the exact average. If you look like a 10-year average, like that's where that.
You're talking 20 new crop, like 25?
Yeah, for new crop, like 25.
Yeah.
Sorry, for next year it's a 2.34 right now, which is kind of the long-term average. Yeah, so I would think that has a downward bias, going into spring, and especially with costs of production being so high for corn. We talked about this, like, farmers are going to try to cut where they can. And the cheapest thing you can plant is soybeans. I mean, compared to those two crops. So, I would think that beans are going to have a tough time out forward, especially if South America looks like they're going to be good, January, February timeframe. I think beans are going to be the weak horse here. If those, again, we got to prove a 53 yield also.
All right. Ben, any thoughts on your mind here through the report?
Just watching the trade, and you always wonder how much bearishness you had factored into a report, and by the close of the day, I think you have a pretty good idea. Excuse me. I agree. I think that beans have a big hill to climb here, but I don't want to lose sight of the fact that we are, right at $10, slightly below, and I think it's going to come down to how we finish beans here, and we could pummel beans. I feel like we're watching corn in the same light that we saw last year as the market moves from tightness to abundance, and they're going to price to do business. They have to, and maybe some things that come together that we do some business, and then we get a few wrinkles in production in South America, and everyone gets fired up again. But for now, the bean balance sheet looks burdensome, and I think it's surprisingly burdensome versus expectations today.
Very good. Gentlemen, anything else to add before we put a wrap here?
Yeah, I would
last
just
minute
say,
comments?
think about the hierarchy of what's happened this year with acres, right? We initially thought low prices should lead to cost cutting. We came out of really heavy corn rotation last year. We expected it to be heavy bean rotation. That showed up in the March planting intentions report. They reversed it in the June report, and then they basically double backed again as we started to get FSA data. We don't actually see the FSA data till 1 p.m. today, so we'll put that in our nightly comments and talk about that then. But that's also like probably what changes that FSA data rolling in, and the surveys have been kind of all over the map. So be curious to see what that says.
Yeah, I was going to add one thing to that too. We talk about the trade war in 2016, and I remember we were trading $1 billion carryout in beans. I mean, it was like one of those, like, how are you ever going to get out of this? And we basically traded, the low tick was like $9, and we traded between $9 and almost $11 during that whole time frame. So, to Ben's point, I mean, nearby, we're trading $9.50. We got down to $9.59 today. So we've gone $3 straight down. So it's not like there wasn't, like, this is all brand new news. So you just don't know, I guess in today's environment, we talk about interest rates and all these things, like, being at 9.50, we're kind of at trade war prices right now. So, trying to be optimistic about something is that we're trying to find that price where we can, fix that balance sheet a little bit. So do I think we're dollars and dollars overpriced? I personally don't. But, doesn't mean the market has to agree with me.
No, but I mean, that perspective is good because when you're in the midst of it, it feels like, well, what, how this thing can go to some crazy number. And I think that perspective helps a lot, to at least keep a clear mind. When you're
and the counter to that is, no 25 beans are at 10.35, right? So if you get, 50-cent bounce rally, like, the back end's going to look probably expensive again, in my opinion. If you get anywhere near $11, I think you're probably $11 will be a cap, going forward. So.
Yeah, that's good. Very good. We'll give a quick rundown of the markets here. We got December corn up 6 1/4 now, back above $4, 401.5. November soybeans down 17, 985 1/4. And December Chicago wheat's down 3.5 at 562 1/4. Every day that the markets are open, we're streaming live at 8:15 Central Time on X, Facebook Live, and YouTube Live. We appreciate everybody tuning in here today for the bonus edition of the War Room. We'll be back tomorrow morning, as Dustin mentioned. We'll take a look at FSA data, and I'm sure we'll have a few more thoughts as we digest the report here today. So thanks again for everybody tuning in, and we look forward to talking to you again tomorrow.